Hi guys, so this is the 2015 exam craft mock paper. It's a type B question and the accounts that we're doing are for Ger Power. So we start off the question as always calculating our goodwill. So Ger Power lodged €120,000 to the bank account on the 1st of the 1st 2014, and on the same day he purchased a business for €100,000, and it consists of the following assets and liabilities, and it list them out. So we have premises of 80, stock of equipment of 10,000, stock of 3,000, debtors 2,700, 4 months rates prepaid of €500, stock of heating oil of 570, and stock of stationery of 150. So our total assets when we bought the business was €96,920, and our liabilities are the creditors of €3,250, and we also had light and heat due of €580, which brings our liabilities to €3,830. So our net worth, NW stands for net worth, so the business was worth €93,090 when we bought it, but we actually paid €100,000 for it, which means we paid €6,910 extra. And when you pay more for a business than what it's actually worth, it's called goodwill. So your goodwill figure is €6,910, and that's an intangible fixed asset in the balance sheet. So next working that I did was light and heat, and I did that one first because there was light and heat due at the start of the year. So let's have a look through the question, see what it says about light and heat. The first thing I saw was light and heat due at the start of the year. There was also stock of oil at the start of the year. Then in the business bank account payments, we had light and heat of €1,640, and we also had electricity bill due at the end of the year. So as well as all of that, it tells us in point 4 that Power estimated that 1/4 of light and heat used should be attributed to the private section of the premises. So let's have a look. At the start of the year, we had €580 worth of a bill due. So €580 we hadn't paid yet at the start of the year, which means that electricity was actually for last year. So that's why there's a minus there. I'm subtracting that. That was from last year. We had stock of oil. So when this year began, or when we bought the business, there was an oil tank sitting somewhere at the back that had €570 worth of oil in it. So we're going to use that this year. Then we spent another €1,640 on light and heat. That's from our bank account. And at the end of the year, we owe €166 in an electricity bill. So that electricity was used this year. So this electricity was used last year, so I'm taking it away. This electricity was used this year, so I'm adding it in. This €570 worth of oil, that was used this year. We had that at the start of the year, and then we bought more. Alright, so the amount that we actually used was €1,796. And it tells us that 1/4 of that is actually for drawings. Well, it's to be used for the private section of the business, and we know that that is always drawings. So asterisk that to show, I have my asterisk there already. That is going to we're going to come back to that when we're doing our drawings working. Okay, so this is not good for us to be owing money at the end of the year, so that's a current liability in the balance sheet. And then the charge for this year for my profit and loss account is €1,347, with the 449 is going to come back up when we're doing our drawings working. Alright. Next working that I did was rates. So a few different things with rates in this question as well. This is similar. We've done this before. So rates at the start of the year, we had 4 months prepaid. So be careful, it's 4 months prepaid now. Usually it's 3 months, but that's not to say that it's always going to be 3 months. It could be 2 months, 3 months, 4 months, 5 months, 6 months, whatever. So in this question, we had 4 months prepaid at the start of the year worth €500. Then in the bank section, it says that we paid rates for 12 months of €1,800. So 4 months and then another 12 months. There isn't 16 months in 1 year, so that means we obviously paid 4 months for next year. So of this 1,800, 4 months of that was actually for next year. So take your €1,800, find 4 months of that, 4 over 12, which is €600. That €600 we paid this year, but we're not actually using it for until next year. So it's a current asset in the balance sheet. That's good for us to be paying things in advance like that. Okay, so it means that the amount payable for this year was €1,700, €1,700. And back to point 4, it says Power estimated that 1/4 of the rates payable should be attributed to the private section of the premises. So of this figure, 1/4 is for the private section of the business, which is drawings. So 1,700 multiplied by 1/4, 1/4, is €425. That's going to go to drawings. So I'm asterisking that. Okay, so of the 1,700, 425 is for the private section. So it leaves €1,275 as the expense for the business in the profit and loss account. All right. So what I'm taking from this is that's a current asset. We've paid in advance. That's a good thing for us. Drawings I will come back to, and this is my charge for the profit and loss. Next one is stationery. This is also, we had stock of stationery at the start of the year, so I'm still looking at all the things at the top of the question. I'm doing my workings from up there first. So stationery, I put that in with wages and general expenses. If this is general expenses, stationery would fall underneath general expenses, so that's why I have it together, right? So at the start of the year, I had stock worth €150. So think of the office in school, they would have staples, paper, whatever left over. Okay, so we had €150 worth of stationery at the start of the year, and we ended up spending another €25,600 on our general expenses. And stationery would fit in as a general expense, so you need to add those two together, which leaves our charge for the year as €25,750. That's that one done. Next is my loan interest and my loan repayment. So as always, do these together. So let's see what it tells us about the loan. It's point 2 in this question. It says, on the 1st of the 8th, 2014, so the 1st of August, the business borrowed €100,000, part of which was used to purchase an adjoining premises costing €95,000. So don't worry too much about the adjoining premises. We only care about that for when we're doing our balance sheet. So it was agreed that Power would repay the loan in 10 annual instalments of €10,000 each, and the first instalment would become payable on the 30th of the 6th, 2015. Interest on the loan was calculated at 9% per annum to be paid monthly at the end of each month. So I'm going to do the loan interest first. We got a loan of €100,000. Okay, we borrowed 100,000 and the rate of interest is 9%. 9% interest has to be paid over a whole year. We didn't have this loan for a whole year. We only got it at the 1st of August. So calculate how many months interest we need to pay. We need to pay August, September, October, November and December. So that's 5 months. So 100,000 by 9% by 5 over 12, which is €3,750. Okay, that's how much we should be paying. Check and see, is there any paid already? Go to your bank payments. We have interest paid of €3,400, which leaves us with an amount due. We still have to pay €350. Okay, so that's not good for us to be owing that money. So it's a current liability in the balance sheet. That's why I have that labelled there. Okay, it also tells us in point 4 that Power estimated that 1/5 of interest payable should be attributed to the private section of the business. So the payable figure is the 3,750, which I calculated up here. And of that figure, 1/5 is actually for the private section of the business or private section of the premises. Okay, and that means it's drawings. So of the 3,750, I calculate 1/5 of that. It tells me it's 1/5 in the question. So 1/5 of 3,750 is €750. So of the total amount payable, 750 is for the private element. So therefore, €3,000 is the charge for the year for the business, which is your expense and your profit and loss. So you're only putting expenses or the amounts of things that are actually attributable to the business into the expense section of your profit and loss. Okay, into your profit and loss at all. Okay. The next thing I'm looking at is the loan repayment. So it tells us that the first instalment would become, it was agreed that Power would repay the loan in 10 annual instalments of €10,000 each. So annual, once a year. The first instalment would become payable on 30th of the 6th, 2015. So this is where you need to split it into a current liability and a long-term liability. So we are doing the accounts for the 31st of the 12th 2014. So 31st of December 2014. We have to pay €10,000 on the 30th of the 6th 2015. So that is 1 year away. That's within the next year. So things that we need to pay back within 1 year are going into our current liability. So that's why I have 10,000 has to be paid back within 1 year. So the current liability in the balance sheet. Okay. The whole loan was 100 grand. If we're paying back 10,000 next year, it means we have to pay 90 grand back in longer than 1 year, a period that's longer than 1 year. So the rest of it, the remaining 90,000, is going to be my long-term liability. So LTL, long-term liabilities, which is in our finance by section. It used to be called long-term liabilities, but it's now the heading creditors, amounts falling due after 1 year. So falling due within 1 year, we have to pay 10,000. After 1 year, we have to pay 90,000, and that makes up the loan of 100,000. Okay, and that's where that comes from. That's the loan looked after. Next is where am I looking? We have provision for bad debts is what I did next. So provision for bad debts is, we have our debtors figure from the end of the year. You know what a provision is where we set money aside for our for people that can't, that we think won't pay us. So we have debtors of €3,750 in this question. You're getting the 31st of the 12th figure, the figure from the end of the year, which is 3,700. Whoa, sorry, I just dropped my phone. €3,750 by 4%. So it means that €150 of our debtors may not pay us. So prudence principle, we're erring on the side of caution. We're going to show this in our accounts. So we are only creating this provision now. So we're setting up the provision, which means that there's no previous provision. Okay, so the €150 gets taken away from our current assets in the balance sheet, and we have no previous provision. So we've got an increase in our provision of €150, and that's an expense in the profit and loss account. All right. The next working is equipment. So the depreciation, it tells us that in the same points, it's point number 5, the same point as the provision for bad debts. We want to charge depreciation at a rate of 15% per annum on equipment held at the end of the year. So at the start of the year, up the top of the question, we had equipment worth €10,000. The €10,000 is going to be depreciated for the full year. We had it for the full year, so you multiply that by 15%, which is €1,500. We then bought more equipment throughout the year. It says it's in our bank payment section, and we bought equipment worth €14,000. So we purchased that on the 1st of the 10th, which is the 1st of October. So we had it for all of October, November and December. So we're getting 3 months there. So it brings our total depreciation, then add those two together, to €2,025. That's our expense in the profit and loss account, and it's also, you take it away from your fixed assets in the balance sheet. So while we are on the topic of depreciation, the next thing I spotted was we had a value. We're looking at premises. So if you look at the top of the question, when we bought the business, there was premises worth €80,000. Okay, that was the value at the start of the year. Then when we got the loan in point number 2, we used the loan to buy an adjoining premises costing €95,000. So we had the one that was worth 80, plus we bought another one worth 95. So that brought our total value up to €175,000. And that's the figure that's going to go into the fixed assets in the balance sheet, right? Then at the end of the question, if you look at the bottom, it says he estimated that the total value of the premises at the end of the year was 170,000. So if we spent 175, or we have fixed premises to the value of 175,000, and now they're only worth 170, the difference of those two figures, the €5,000, is our depreciation figure. Okay, so we don't actually have to calculate it, but you need to see, well, if they should be worth 175, but he's saying that they're only worth 170, which means that there is €5,000 there in depreciation. Okay, so from this working, We have the 175 going into the fixed assets in the balance sheet. The €5,000 is going to be an expense, the charge for the year, depreciation on premises, and that's all. Your double entry is going to be a minus in the fixed assets in the balance sheet. Okay, and the next thing is college fees. So if you look in the bank payment section, it says college fees €6,000, half for 2 staff members and half for family. So the half that's for family is going to be drawings. So the total was €6,000. Half of it is for a family member. When it's family member, it's drawings. So from the 6,000, take 3,000 out, which leaves us with €3,000 of the college fees for staff members. Now in this question, the marking scheme is asking for you to put that in as a separate expense in the profit and loss account, whereas this is a mock paper, whereas in the profit and loss, not in the profit and loss, in the SECs, the standard leaving cert papers, it would require you to add it into the salaries and general expenses, the general expenses one, which is where I think it should be. I don't think it should be an expense on its own, but for the purpose of this marking scheme, I'm going to keep it as a separate expense, but going forward, you should be adding it into the general expenses. All right. So from this, we've got the drawings of €3,000. That's going to come when I'm doing the drawings figure, which is actually next, and the 3,000 then for the staff members is going in as an expense in the profit and loss. So the last working then is the drawings. We're starting off with the purchases. So it says in this question, usually it's that they take a certain amount for the year. For the year. But they take it weekly. In this question, they're taking it monthly, so be careful of this. So it says each month, not each week. Power took from stock goods to the value of €360. So every month he was taking things with a value of 360. So €360 per month by 12 months in the year is €4,320. Our cash was €420 by 12 months of the year, which is €5,040. That's our cash. So that's coming from point 1 in the question. Then we have light and heat. The rest of them are all coming from my workings. So light and heat, 449, rates 425, loan interest of €750, and my college fees, which has come from just up here, is €3,000, which brings my total drawings figure to €13,984. And you're actually getting 10 marks for that figure there. There's an awful lot of work that goes into calculating all of this. 10 marks for your drawings. Okay, so I'm now going to get ready to do my balance sheet. As always, balance sheet first, trading profit and loss second. Okay, so starting off my balance sheet, as always, with my tangible fixed assets. In this question we have 2. We have premises, and we have equipment. Okay, so my premises, 175, I just talked about this in the working. The cost was 175,000. We have depreciation of €5,000, which now leaves us with a value of €170,000. Okay, which it tells us at the bottom of the balance sheet, bottom of the question. Next is equipment. We have equipment worth €24,000. So it's the equipment that we had at the start of the year plus the new piece of equipment, which leaves it at 24,000 cost price. The depreciation we calculated was €2,025, which is with a net book value of €21,975. Okay, so do your totals up. Even do these totals, even though you may not get marks, but you could get deducted marks if you don't fill them in. Okay, so like a penalty. 7025, and this is 191,975. All right. Next is my intangible fixed assets. Fixed assets, and that's my goodwill, which we calculated at the top of the question, which is €6,910. There was no investments at all in this question, so you don't need to worry about that. You can just leave that blank. You don't need to write in financial fixed assets or anything like that. So we're going straight into our current assets. Our current assets, we have our debtors. We'll start off with debtors, and I'm stepping into the inside column. We have debtors of 3,750 less provision. Don't forget about the provision. Provision was €150. So it leaves our debtors at €3,600. So what that means is we have people owing us money of €3,750. We're setting up a provision, and we reckon that maybe €150 worth of their debtors will not pay us. So the amount that we're going to carry through in our balance sheet is the amount that we think we're going to get paid is €3,600. Okay, next is stock. Okay, stock is 4,700. That's coming from the bottom of the question. That's your closing stock. We've our bank, cash on hand, 15,300. And we also have rates prepaid coming from our workings. Rates prepaid. Our rates prepaid figure is €600. Okay, so add those up. There's 4 of them there. And that will give us €24,200. Alright, let's push this up. Next is our current liabilities. So heading, creditors, amounts, falling, due within 1 year. Okay, so things we have to pay off within 1 year. First thing in there is our creditors, coming from the end of the question, the bottom of the question. And we've creditors of 3,590. We also have ESB due coming from our workings. ESB due of €166, so electricity bill due. We have a loan instalment. You can call that loan repayment if you want. And that is €10,000. And we also have our interest, loan interest due, also coming from the workings. Loan interest due figure of €350. So add those 4 together and we get €14,106. So you're taking that from your current asset, the total of your current assets, and that will give us our working capital. So we have 24,200 coming in within the next year, and we have 14,000 going out. So our working capital is 10,094. 10,094. Okay, so add your 191 plus your 6,910 and plus your 10,094, which leaves us with a total net assets of 208,979. That's my total net assets, so I'll just label that. Total net assets and underline it. Okay, so that's our first balance, and that's what we're using to help us find our net profit figure. So I'm just going to shove this up a bit. And next, second half, or the second part of the balance sheet, is the financed by section. So financed by. Where does the business get the money from? This is the value. Where did the business get the money from? So first heading, creditors, amounts, falling due after 1 year. So things we have to pay back after 1 year, which is the rest of the loan. That is our loan of €90,000. Okay, so it's not the full 100 going in, it's the amount that we have to pay back after a year. We're paying 10,000 next year, the rest has to be in years after that. Okay, then we also have our capital section. Capital. So we have our capital, opening capital on the 1st of the 1st, which is €120,000. Okay, then we had an introduction of capital. We introduced capital in the form of inheritance. So during the year, Power received inheritance of €7,000 and lodged this to his bank account. So that would be considered an introduction. So plus capital introduced of €7,000, and add those together, 127,000 less drawings. Your drawings figure from your workings, 10 marks for this figure. It's the biggest one for marks in the balance sheet. Take that away. Okay, so wait, I just 127 127,000 minus 13,984, which leaves us with 113,016. Okay, and then you say plus your net profit. Add profit. Now, if you get a minus here, don't panic. If it's a minus, it's just a loss, right? So, that will give us our capital employed figure. Okay, can you see this? Yeah. So my capital employed figure is 208,979. Got that? Literally just brought it down from up there. So I need to have my loan plus my capital plus my profit should add up to this. So if I'm trying to find this out, so this plus we'll say X gives me this. So to find out what this is, it's going to be my 208,979 minus that. So plus 90 minus 208,979. It gives me a profit figure of €5,963. Okay, so small profit figure, but it's still a profit. And that is the figure that I'm going to carry through to my profit and loss account to work backwards. Okay, so I'll do that now in the next video. So this is the trading profit and loss account. I just filled in the usual order things go into. So we're just going to fill in what we know. We're going to work backwards and find our sales figure. So sales we do not know. Opening stock we know. We get it from the top of the question. We had stock of €3,000. We're getting 2 marks for putting that in. So I'm going into the imaginary middle column that I have here, €3,000. Purchases I don't know. Closing stock I do know. Closing stock is always a minus of €4,700 coming from the bottom of the question. Okay, so sales less cost of sales gives me my gross profit. My cost of sales are opening stock plus purchases minus closing stock. I don't know this figure. I don't know this figure. I do not know this, and I don't know this. Okay, so I'm just leaving it at that for the minute. Next is income. So we'll put our income in first. So add income. In this question, we don't have any. Okay, so that was just pure habit that I wrote that in there. So you can put a 0. All right, or you can just leave it. I'd probably just leave it, to be honest. Less expenses. So I'm going to start looking through my workings. We have light and heat of 1347. So I'm in the middle column here again, 1347. We have interest on our loan. On the loan of, that's just going in as a standard expense. Doesn't have to be kept separate, of €3,000. We have college fees of €3,000. We also have wages and general expenses. That's the one with the working of the stationery. That's €25,750. We also have rates. The rates are €1,275. We have a bad debt provision. The increase, that is, of €150. Let's move that up. We also have depreciation on equipment of €2,025, and we have depreciation on premises of €5,000. All of those added together bring it up to €41,547. So net profit figure, bringing it across from the last from the balance sheet, net profit of €5,963. Okay, I'm just going to double line that. That's the end of it. So now it's time to work backwards. Let's, where is the first one that I'm going to go for is my gross profit figure. So I'll just, that's my subtotal. Oh, no, it's here. Sorry. Can you even see that? Yeah, you can. So I'll just bring this back down so you can see what I'm doing. So my net profit figure, usually it would be gross profit minus your expenses gives us your net profit. So if I have my net profit and I have my expenses, I want to know what my gross profit was, which it would be the figure before the expenses were taken out. So it's going to be my net profit plus the 41,547, which should give you a figure of 47,510. So 47, this is going to my gross profit figure, 47,510 euro. So 47,510 euro minus that will give me my net profit of this figure here. The question is worded just for next figure is going back up to get my my sales figure. So it says in the question, Power did not keep a full set of books during 2014, but estimates that the gross margin should be 25%. So if that means that this figure here represents 25%. So if that's 25%, my sales figure is 100%. All right, that means that my cost of sales is 75%. But you don't need to worry about that if you don't want to. Okay, so if my 47,510 divide that, if that represents 25%, divide it by 25, multiply it by 100 to find your sales figure, which is 190,190,040. Okay, that's my sales figure. So if you wanted to find this figure, you could go 47,510 divided by 25, multiply by 75 to get 142,530, or you could just say 190 minus that will give you that figure anyway. So I'll show you that way as well. 190,040 minus 47,510, which will give you 142,530 euro. So that's what I just did there. Okay. Next figure that I'm looking for is purchases. So we work backwards here again. If we were going forwards, we'd be going opening stock plus purchases minus closing stock gives us that. So if we already have the answer, work it backwards. We have 142,530. This is takeaway, so we're going to add that on. Add 4700, and that's add on, so we're going to take it away. Minus 3,000. So my purchases figure is 144,230. Now, that looks like it's finished, but just be careful. We're going to get marks for showing the drawings here. So, purchases, should do a bracket. That was our figure after the drawings. Remember, the owner took stock every month to the value of 360 euro. So the amount of purchases that he took throughout the whole year was 4,320 euro. So something minus that will give me this figure. So I'm trying to find what my original purchases figure was. So I'm going to have 144,230. Before I took that away, what was the figure? So I need to add them back in. So 4,320, which leaves my purchases figure at 148,550. So 148,550. Okay, and that is that question done.